It is the 31st of May 2021, Memorial Day in the United States, so if that is where you are, I hope that you are enjoying your holiday. My name is David Hickson, and in today's market update, I'm going to be speaking about Bitcoin. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. Bitcoin is a fascinating instrument. There's a huge amount of noise surrounding the price movements of Bitcoin, and one of the things that is often mentioned, particularly in social media when it comes to Bitcoin, is the fact that Bitcoin is a totally new kind of instrument and that it possibly does not behave in the way that traditional financial markets have behaved over the years. And so the first thing that we have to ask ourselves when taking a look at Bitcoin is whether, in fact, Bitcoin does exhibit the same kind of price action that we see in stock markets and in forex markets and in commodity markets and so forth. Of course, Hurst discovered his cycles in the markets by analyzing the movements of stocks in the United States, and he did that 50 years ago. So does what he discovered 50 years ago apply to this completely new instrument, this completely new kind of market? Of course, Bitcoin at the end of the day is simply another kind of currency. It is, of course, referred to as cryptocurrency. It is a means of exchange. You can exchange value through Bitcoin, regardless of the way in which it is generated, the mining process and so forth. It is nevertheless simply a means of exchange. And so we might expect to find some cycles in the price movement of Bitcoin. So let's take a look first and ask ourselves whether indeed these cycles are to be found in Bitcoin. And then we need to ask ourselves whether the cycles that are found in Bitcoin are the same cycles that Hurst discovered in US stocks 50 years ago. So how do we answer the question as to whether there are cycles to be found in the data? In fact, what we can do is exactly what Hurst himself did 50 years ago when analyzing the stock prices that he was working with, and that is that we perform a form of spectral analysis. Now, there are various different ways of performing spectral analysis, and Sentient Trader, in fact, uses exactly the same process that Hurst used 50 years ago. It's a very simple form of spectral analysis, and I'm not going to go into detail about it here, but the results of the spectral analysis are presented on this chart over here. This is what Hurst called a periodogram. A periodogram presents the results of the spectral analysis by plotting these vertical lines where there is some evidence that there is a cycle present in the data. And the way that this works is that the taller the vertical line is, the more evidence there is that there is a cycle of that particular wavelength present in the data. And so the tallest line that we have on this particular time frame, and you can see that this is an analysis that has been performed on the daily data. The tallest line is this position over here, which is somewhere between 130, which is that mark over there, and 140, a little after the halfway point, which is probably at about 136. So we have some mathematical evidence that there is a cycle of 136 days beating in this particular market. Now, those of you who have been working with Hurst Cycles for some time will recognize that that is exactly the length of the average 20-week cycle that Hurst found in stock markets 50 years ago. So that is encouraging. Not only are we seeing some evidence of cycle activity in this price action, it is in fact very similar, possibly, to the cycles that Hurst himself discovered. Now, we could go through this at some length and we could discuss the differences between these high points or the peaks on the periodogram and compare them to what Hurst discovered 50 years ago, but I'm not actually going to waste time doing that. The point here is that there is some evidence that cycles influence this market, and there is also some evidence that the cycles that are influencing this market are very similar in wavelength to the cycles that Hurst discovered 50 years ago. We can also, as a matter of interest, take a look at the spectral analysis that has been performed on the weekly data and also on the monthly data, and we can have a look at the evidence of the cycles that have been found here. There is a fairly strong cycle at about 16 months and another fairly strong cycle at about 19 months. Of course, we are expecting an 18-month cycle according to what Hurst discovered, and so again we have some evidence that the cycles are similar. You might want to extend this work and do much more extensive work to convince yourself that the cycles are not only present in Bitcoin but are also similar to the cycles that Hurst himself discovered. But for the purposes of today's video, I'm going to move ahead and get Sentient Trader to perform an analysis, and then we can discuss what the implications of that analysis are. And so first of all, let's take a look at the Trough analysis. This is an analysis that is performed on the basis of the idea that the cycles which influence the price action are synchronized at their troughs, which is of course one of the principles that Hurst himself defined. Now, as I've mentioned, Hurst was analyzing the price movements of US stocks, and so I often qualify that principle by pointing out that he stated that the price movements of stocks are synchronized at their troughs. In many other instruments, such as gold and many forex pairs, we find evidence that in fact the cycles are synchronized at their peaks. And I should point out that there seems fairly good evidence that the better analysis in Bitcoin is an analysis that assumes that the peaks are synchronized and not the troughs. I won't spend too much time speaking about that here. It is something I have discussed previously, particularly if you take a look at my videos about gold. I go to some length to explain why a peak analysis is probably more valid, but I certainly think that that is the case here in Bitcoin. It is nevertheless interesting to take a look at the trough analysis, because even if the cycles are synchronized at their peaks, there is still some valid information that can be gathered from taking a look at a trough synchronized analysis. Of course, an important thing that we should do here is that we should display this chart on a logarithmic scale, because the linear scale doesn't really express the price actions, particularly the shorter term cycle actions, very clearly. On a logarithmic scale, the cycles become a little clearer to visualize. So here is our trough analysis. Let's consider that for a moment. We have an 18-month cycle trough over here in March of 2020. Interesting, because of course we had a very important trough in stock markets around the world at the same time. You can see the position of the previous 18-month cycle troughs, and here you can see an example of why a trough analysis might not be a very good one to base all of our trading decisions upon on this chart. You know, we have an 18-month cycle trough over here in early 2017, and there was really hardly a blip on the upwards movement. And so a trough analysis raises some questions. We're not going to spend too long considering those questions here. The important message in terms of this trough analysis is that we are expecting an 18-month cycle trough over here a little after the middle of this year. And let's just quickly zoom in and take a closer look at that. Here you can see the rather broken up nest of lows for the 18-month cycle trough. You can see that the nest of lows for the 18-month cycle trough is sort of leaning over to the left, and it's obscuring this 80-day cycle trough nest of lows over here as well. That's another possible sign that the trough analysis is not the most reliable analysis when you see that kind of merging of nests of lows. Nevertheless, those are certainly dates to be looking out for in terms of the next expected big trough in the price movement of Bitcoin, because Bitcoin, as you can see, has of course been moving downwards. But now let's take a look at a peak analysis and see if the peak analysis provides us with any interesting information. So here it is, the 18-month cycle peak, as you can see marked here, in December of 2017. Then we had another 18-month cycle peak over here in about the middle of 2019, and the recent peak which formed, I think that was in April of this year, was also an 18-month cycle peak. Now, why are there no longer cycles in this chart? What is the next longer cycle? Of course, in Hurst's nominal model, which again I should clarify he discovered by analyzing stock price movements, the next longest cycle is a 54-month cycle. Is that going to be the case when it comes to Bitcoin? Well, the truth is that we don't know. Because we are working with the default nominal model here, and certainly the cycles seem to be looking fairly good, we could make the assumption that the next longer cycle is the 54-month cycle. But we don't know that for certain. It is possible that in Bitcoin, for one or other reason, the next longer cycle is in fact a 36-month cycle. We don't know that, and we do not have enough data to actually make a final decision in that regard. As a matter of interest, we can take a look at what's called the current cyclic model of both of these analyses. And you can pause the video if you want to take a look at a little more detail here. But this, you can see, is the peak current cyclic model, and this is the trough analysis current cyclic model. The interesting column here in terms of trying to decide whether the cycles we are using are valid is this variation column over here. You can see that the variation in terms of the cycle length that has been found in the peak analysis varies from 2% in terms of the 18-month cycle, and this is of course the peak analysis, so only a 2% variation. It's very close to the nominal length that Hurst discovered 50 years ago, and the variation gets a little larger as you move down into the shorter cycles. You can see 16% over here, 16%, 20%, 27% variation. So we are seeing some variation in those cycles. As a matter of interest, the variation on the trough analysis is generally a little greater than it is on the peak analysis, which is another possible indication that the peak analysis is a better analysis to be using for making our trading decisions. And so what is happening now? Well, we have seen one 18-month cycle, or one wave of the 18-month cycle between 2017 and 2019, and I'm looking here at the peak analysis. I'm not considering the trough analysis at the moment. And then we saw another 18-month cycle elapse from 2019 until earlier this year. So we have seen one 18-month cycle, two 18-month cycles, and so what is happening now is that we are in the third 18-month cycle of a possible 54-month cycle, and that is assuming that the 54-month cycle is present in Bitcoin. Let's first of all assume that the 54-month cycle is present. If that is the case, and if we look at the trough analysis as a matter of interest, we could find some corroborating evidence that there is a 54-month cycle present, certainly in terms of influencing the troughs. And so if a 54-month cycle is present, then what we would expect to see is the prices dropping down from the 18-month cycle peak, and then it is going to go up again into the next 18-month cycle peak, which, as you can see, is expected around about the end of 2022, perhaps early 2023. That would be our third 18-month cycle. Now, what do we expect from that 18-month cycle? And here I'm going to actually change the scaling of the chart, because one of the problems with presenting a chart that sort of fills up the space available is that one tends to assume that the top of the chart means that's some kind of a limit on the price, and that is certainly not the case. We need to bear in mind that we're looking at a logarithmically scaled chart here, of course, but nevertheless we had a fairly bearish 18-month cycle that followed the peak in December of 2017. Remember that we measure bullishness or bearishness by working out where the peak, or the trough in this case, occurred in the course of that wave. And we also work out, of course, whether price dropped or rose during the course of that same cycle. This is a fairly bearish 18-month cycle that elapsed into 2019. The next cycle was, in fact, a bullish cycle. It doesn't take a great deal of experience to realize that that was a bullish cycle. Price ended the cycle much higher than it started it. In fact, I think this level over here was about $14,000, was it? Something like that. And of course it came up to almost $65,000, I think, up at the top here. So in fact, price definitely did a big increase in the course of that cycle. And the other indication that it was a more bullish cycle was the fact that the peak occurred earlier than it did in the previous cycle. And in fact, it is worth measuring those days so that we can develop some expectation in terms of where the next trough or low point is going to form. So you can see that the first move down following the peak in December 2017 lasted for 362 days. That's 362 days out of a 550-day wave. So it was a late trough, which is of course bearish when you're looking at a peak analysis. The trough for the second 18-month cycle occurred earlier, as I've just pointed out, 258 days after the peak in 2019. So it was an earlier trough, indicating a more bullish cycle when, of course, you are looking at a peak synchronized analysis. So where is our next trough going to occur? Well, considering only the peak analysis, and let me move this chart over a little bit so that we get a little more room on our chart. Considering only the peak-based analysis, we would expect the trough to occur earlier than the previous one on the assumption that we have a 54-month cycle present. Because this third 18-month cycle should be the most bullish of all of them, bringing price into the 54-month cycle peak. And so we would expect the trough to occur before the 258-day mark, because this is expected to be a more bullish cycle, a more bullish wave of this cycle. And so we would expect it to occur before the end of 2021, if you look at the date scale at the foot of the chart. And in fact, the nest of lows for our 18-month cycle trough provides a very good potential place at which the next trough could occur. And so we are seeing price moving down. We are looking at it forming a trough at around about the time that this 18-month cycle trough is expected, and then price is expected to go up. And again, the top of our chart seems to be limiting our expectation. But remember, we are expecting, if there is a 54-month cycle present in this price action, which we have no evidence that there isn't at the moment, we are expecting this to be the most bullish of the three 18-month cycles, which means that our expectation for the price of Bitcoin is indeed going to be very bullish into the end of 2022, early 2023. Of course, if there is not a 54-month cycle present in this price action, perhaps there is only a 36-month cycle present. In that case, this peak here is likely to have been the highest peak that we will see for the next 36 months, or at least until we start moving up into the next 36-month cycle peak. But we have absolutely no evidence that there is a 36-month cycle in this price action. And so based on what evidence we have, and over 50 years worth of experience of looking at cycles influencing price action, I would say that the outlook for Bitcoin is very bullish going into the end of next year. So that's the general outlook in terms of timing. In my opinion, we're in the third 18-month cycle, which is going to end up being a very bullish cycle. Let's take a look at some price projections, and we'll start by considering the 18-month FLD. Because of the sequence of price interactions with the FLD, which you know is something that I enjoy tracking and trading, it is quite possible, dare I say likely, that this 18-month cycle FLD could be expected to provide support at about the time that this 18-month cycle trough is expected, according to the trough analysis. And again, I should remind you about the disclaimers I've already made in terms of the trough analysis. I will be watching with great interest as that time approaches and be observing closely to see whether the 18-month cycle FLD does provide support. What's happening right now? Well, let's display another FLD. This is the 40-week FLD, and you will see that something really rather interesting is happening at the moment. And that is that price has found support at the level of the 40-week FLD. You will often see this kind of thing because FLDs are very important lines for all financial markets. And you can see prices come down to the FLD, and if we zoom all the way in, we can look at that in some detail. Prices come down to the FLD and it's been struggling to get below it. What are we expecting at this point? I am expecting price to break down below the 40-week FLD. And when it does that, we will have a very useful projection for calculating the price level at which the 18-month cycle trough will form. And so we have to wait for price to break down below the 40-week FLD, if it does, in order to generate a target for that trough. As a matter of interest, let me show you the 20-week FLD, because the 20-week FLD did something very similar only about a month ago. As you can see, price came down to the 20-week FLD, and it found approximate support at the level of the 20-week FLD. It didn't succeed in breaking down properly. Well, you could be an absolute purist and say, well, price did break down at this level over here, but these FLDs often provide this kind of approximate support. It's not absolutely perfect. And then a little later, price did cross down below the FLD over here. Hurst actually mentioned the fact that price often does this with FLDs. And on the occasion that price does a kind of a multiple cross down below an FLD, he proposed a simple method for calculating the exact price crossing point, which I have done for us. And the price target generated by price crossing down below the 20-week FLD was at a price of $36,137. And that price level is about over here. As you can see, 2 weeks ago, price achieved that price target and slipped a little below it. But that price target was certainly a very good position for the 20-week cycle trough to form. The important thing to remember about these targets, and I've spoken about it before in these market update videos, is that it does not represent an ultimate turning point for price. It represents a point at which a particular cycle move is fulfilled. There are multiple cycles influencing these price actions, and so there are many other cycles that are pushing the markets. The fact that the 20-week cycle target had been fulfilled meant that that was a very good place for the 20-week cycle trough to form, and indeed it seems as if the 20-week cycle trough did form about 2 weeks ago in the markets. Price has been struggling to get back up again after having formed the 20-week cycle trough, and I would not be surprised, as I've mentioned, to see a similar thing happening with the 40-week FLD, where price will bounce up a little bit and then cross down below the 40-week FLD, allowing us to generate a target for the move down into the 18-month cycle trough that we are still expecting lies ahead of us. Is it possible that this big trough, the 18-month cycle trough that I've been speaking about, has formed, and this is maybe an 18-month cycle trough and price is going to start bouncing up already? It is just possible, but very unlikely, in my opinion. We need to watch each day as we receive new data, and we will of course refine our analysis. But my expectation at the moment is that price will bounce up a little bit out of the 20-week cycle trough, come down into an 18-month cycle trough, and then continue upwards towards its next 18-month cycle peak, which should be a wonderfully bullish move. I do hope that you found this market update interesting and useful. If you have any questions, please put them in the comments below the videos. I should point out that whenever we make a video about Bitcoin or post anything about Bitcoin, we get a lot of spam comments. So please be patient if we don't immediately respond to your questions or comments, because we are probably going to be dealing with quite a lot of that.